G'day folks, welcome back to another update, and today we're looking at Bitcoin and Ripple again. Now the charts are showing both Bitcoin and Ripple dropping off on the daily time frame. We'll go through that and we'll include some backtesting which demonstrates how you could trade using one of two strategies. So don't forget to hit the like and subscribe button to support the channel. So first off, as of today, June 4th, Bitcoin is broadly seen as being in healthy consolidation phase, trading with a tight range between 105,000 to 112,000 after recent all-time highs, with strong institutional demand and ETF inflows supporting the long-term trajectory, though short-term momentum shows signs of mild cooling according to mixed MACD and RSI signals. Broader macro factors like potential US policies supporting digital asset reserves, continued spot ETF uptake and on-chain strength, active addresses, declining exchange supply reinforce Bitcoin's fundamentals. Ripple's XRP trades near $2.26, which is with its outlook turning cautiously optimistic. Technical analysts highlight a possible breakout towards $4.50 to $5 if key resistance levels hold and institutional catalysts like XRP ETF, stablecoin adoption in markets such as Dubai, and inclusion in US strategic crypto reserves materialize. However, risks stem from bearish chart patterns, reduced on-chain activity, and broader crypto market volatility. So first looking at Bitcoin on the long-term trends. So on the monthly here, you can see the price is well above the moving averages, giving us a nice bull run. Although we did have a couple of retraces back here when it dipped into the CCI, and that's probably where you would have closed out your positions on the weekly if you're trading on the weekly. Remember, we always trade on the direction of the higher time frames. If you're trading on the weekly, we take the direction of the monthly. If you're trading on the daily, we take the direction of the weekly, and so on. Now, one thing to notice is at the moment, the CCI on the monthly is just touching that moving average band, which means we may see in June, we might see a bit of a pullback closer towards the moving averages on the monthly price chart. On the weekly, looking at a closer level here, you can see there we did have this bearish divergence on our last video, on our previous divergence, I should say, and that's also against this higher highs on the price, and that broke down, hit our minimum target. Now, one thing I want you to notice is these fair value gaps, and what the fair value gap is for those unfamiliar is you take that candle there, you take the previous high of that candle there, and you raise it to the low of the candle straight after it. So you've got to wait for the candle to complete. So you can see that there was a fair value gap, and what it means is the price normally retraces back to that point there to fill unfilled orders that were available. Now, even going back to this one here, you'll see there's a fair value gap there, and that wick of that candle broke down. All it needs is about a 50% at least to touch that range to close most of those orders. So again, the point being, there was a fair value gap there when it retraced. Now, what you'll notice here as well, if I zoom in on the weekly, you can see there we've got a fair value gap there. So very likely you're going to see it break into that point, but we've also got a fair value gap down at that point there. So if things continue the way they are, and if you look at the daily, it's also already broken into a bearish momentum. So we might see a bit of a pullback into those ranges in the near term. Again, this could take weeks to play out, so it doesn't mean it's going to collapse. Similar to divergence, it could take some time to eventuate. On the daily, again, as I said, it's bounced off that resistance at 111,978. And it's making some slight lower price points. And you'll notice the CCI has already broken below the moving average band, and the price has also broken below that very narrow moving average band. So far the CCI seems to be dropping. So as long as that keeps dropping, we might see the price continue to drop. Again, there's some more fair value gaps on the daily, and we've got some more down here as well. So just be aware of those. So we might see a bit of a retrace to the downside. Now, if we go to the intraday chart, we're trading in the direction of the daily if you're trading on the hourly, so because of that CCI and the price below the moving averages. And what we look for first off on the 1 hour time frame is any divergence. Back here you see we had a bearish divergence as well, lower highs versus higher highs on the price, and that broke down, hit our 23-38% range. It bounced out of there, and then it continued further to the downside. Now at the moment, if I zoom in there, you'll see there we've got higher lows on the CCI. In the same period on the price, we've got lower lows on the price. That actually bounced from there. The CCI broke up, and so did the price. And if I was to draw a Fibonacci retrace on that one, take it back to that high before the divergence started, you can see it broke very easily through that 23.38% range. It actually hit that range and it bounced down, and it's finally broken further to the upside. Now at the moment, the hourly is also still showing a bearish trend, but it's actually bouncing higher. So just be mindful of that. Although predominantly we take short trades on the hourly, and I'll show you the back testing in a minute. Let me just delete this Fibonacci to clean it up a bit. So next we look at the back testing, and the back testing, I've got it started here from the point where the CCI broke below the moving average band, and that was around about the 28th of May, and that's where these two back tests start. The top back test here is the stop loss approach. So we take profits at 3% and we stop it at 5% drop, or when it reverses. The average down approach is also a 3% gain. We close a position, or we average down if it drops by 5% and the entry parameters are met. And the entry parameters is basically when the price breaks below the moving average band, but also the CCI. That's where you enter the position on the lower time frames. So if you let it run through there, you'll notice here as well, ideally you want to let it run through the whole period on the daily, and theoretically you let it continue rising, but also pay attention to these divergence, as I said. And I use the divergence not to trade in terms of entering, but in terms of exiting. So for example, here you're going short and you saw a bullish divergence and you start seeing to raise, then you want to probably close out your position. So you would have ideally closed out your positions when the price broke through that moving average range. And at that point there, the stop loss approach is generating $528, and the average down approach has generated about $10,857. So you would have closed out your positions there and stay out of that position until we start seeing further downside on the CCI and the price. So for Ripple on the monthly, we've got a bullish momentum with the prices above the moving averages. There's no CCI for it on there. On the weekly, it's actually broken below the moving averages on the CCI, and it's into that moving average range on the price chart. So that's a weakening signal. And on the daily, if we go to the zoom in there, it's bounced off this resistance at 265, and both price and CCI are broken below the respective moving averages, giving us a bearish momentum. Although the CCI is approaching that moving average range, which we may see a neutral positioning in the coming days possibly. Now if we go to the intraday chart, the 1 hour chart, we take predominantly short trades from according to the daily, but also notice what we look for again on this chart. We look for any divergence. We had a bullish divergence back there that bounced, hit our minimum target, and more recently we had this bullish divergence as well versus lower lows on the price. And if it's to draw a target there from that low, take it back to the significant high there, you can see there it's also hit very easily that 23-38% range before breaking right through it. Now what we look for any other divergence, and I can't see any at the moment, although notice the price is still above the moving average band, but the CCI is broken into that and it's a fresh breakout to the upside. So don't take long positions yet. Wait for the daily to break and confirm long positioning to be able to be more confident of that. These could be just false breaks. Like this here did okay, but again, you're sort of trading against the trend. So just be cautious of that. If we go to the back test, we start the back test here, and that was started back here around the 19th of May. Stop loss approach is down about or just shy of the $100,000 baseline where we've got the baseline mark, and the average down approach had a bit of a drawdown there when the price moved higher, and again you would have probably closed it out there on when it broke into that moving average range on the daily, and since then it's recovered and it's fallen off again. You would have resumed trading when it started breaking below again on the CCI on the daily. So you'd still be in a trade today on the stop loss approach, and that's generated about $185 so far. Although do notice, because of that bullish divergence, ideally you would have closed it out about there when that CCI broke above the moving average band, and so did the price. As we said in a previous chart, it's actually hit that minimum 23-38% range before bouncing down again. But you would have noticed the CCI is still rising, and you should not have taken any short trades at that point. If you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on a free trial to my Patreon page where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.